Greetings, members, one and all of the Salivation Nation. Misinformation sparks gold and silver's wild ride. Let's explore. Late last week, we saw the price of gold and silver drop rather dramatically, only to almost have recovered all of its losses the following day. Though unusual, things like this happen from time to time. Gold and silver can be volatile, and most certainly we are living in volatile times. But we also have to understand the psychology of the markets and how quickly they can react to news. And the news that broke during those 2 days were in relation to two different job reports and how they took gold and silver buyers on a volatile ride. I'm going to be referencing an article here from Kitco that talks about this very thing as we kind of review and take stock and digest at what happened last week. I think there's some valuable lessons that can be learned from this. The underlying characteristic of gold pricing over the last 48 hours or last 2 trading days of last week has been akin to really a wild carnival ride. It began when the ADP released its National Employment Report, which concluded that private payrolls increased by 978,000 jobs in the past month. The report came in well above the economists polled by Reuters and the Wall Street Journal. So that's kind of a poll which is really, in a sense, anecdotal because you can only sample so much of the population in order to come to these conclusions here. The economists surveyed by Reuters had forecast that private payrolls would increase by 650,000 jobs. So that is quite a substantial increase. Which would have been great news for sure. The ADP report is a joint venture with Moody's Analytics and is always published ahead of the Bureau of Labor and Statistics report for non-farm payroll report, which comes out the following day. So that report indicated that private employers in the United States increased the pace of hiring new employees due to pent-up demand that is a direct result of a rapid reopening of the economy in the United States. While it indicated that there continues to be shortages of workers and raw materials that have adversely curtailed the labor market's recovery, the number of new hires as reported by ADP came in well above the estimates. And the ADP report overestimated private payroll gains in April's employment report after understanding growth throughout much of the jobs recovery, which started in May 2020, leaving economists cautious about reading too much into the report. And that is something that obviously the precious metals sector did not, or the markets didn't. MarketWatch also cautioned its readers about the limitations of gleaning usable information from the ADP report, stating the ADP survey is a poor bellwether month-to-month historically for the government's official employment report. They are both moving in the same direction this year. Economists forecast an overall increase of 671,000 new jobs in May in the Labor Department data, which came out the last day of the week on Friday. And it also includes government workers as well. Even though many analysts underscored the fact that the ADP private sector jobs report is not necessarily strong enough of a precursor to predict the Labor Department's jobs report of the American workforce state. This did not stop many traders and investors from either pulling profits or mass liquidating their positions ahead of the report from the ADP and the Bureau of Labor Statistics report. This report was a primary reason gold sold off so dramatically. The ADP report, considering that gold futures hit an intraday price of $1,920 on Tuesday of last week. Following a 3-day holiday weekend, the United States dramatic describes well. In gold trading, futures traded to a lower 1855 and than yesterday's low. However, once the numbers were released, it actually came in well under economists' forecast from the Bureau of Labor Statistics, which was a consensus that there would be 671,000 jobs added last month based upon a poll of economists by Dow Jones and Wall Street Journal. Market sentiment turned on a dime from bullish to bearish, just like that. And it's just amazing how quickly things can change, for sure, in this environment. According to Brian London, editor of Gold Newsletter, with the consensus expecting an upside blowout jobs number, gold was set up for a fall, as it had proven to be susceptible to good economic news or anything that would encourage the Fed to tighten its ultra-accommodative monetary policies. Instead, we got a number that was disappointing when measured against expectations, and the metals rebounded in response. It was a wild day to see Friday. And pretty much it's what I predicted, although it happened much faster than I thought it would. Because we're back to the concerns being, inflation and other factors, that economic hardship that is still there looming about, even though there are jobs being added to the economy. So this sent gold back into rally mode with a net result of over a 1.1% gain in the gold futures vis-a-vis the August 2021 COMEX contract, taking precious metals to almost $1,900 again by the close of the trading in New York on Friday. It's just fascinating. So the last 24 hours has taught us that us that are in the precious metals sector as traders and investors are so hungry for information regarding the upcoming monetary policy of the Federal Reserve, they focus so intently at any fundamental events that could shift market perception and sentiment. Information as to when the Federal Reserve will taper its quantitative easing program and raise interest rates has been laid out in a transparent measure by the Federal Reserve, is seen in the latest minutes and press conference by Federal Reserve Chairman Jerome Powell following each FOMC meeting. However, because their mandate is data dependent, we know that at some point the Federal Reserve will begin to taper and begin to raise their funds rate. Simply put, the monetary policy of the Fed is a moving target and susceptible to vastly be restructured as the economy rebounds. And I bet you that's what they were betting on, essentially, with these jobs numbers that were coming out one way or the other. And I think that's something to take into account, as they're hoping that will be the case, because you remember that for quite a while they were stern that there would be no change in monetary policy until 2023 in terms of interest rates. The incredible volatility from strongly bearish to strongly bullish in a 24-hour time frame with regards to silver and gold is proof that traders, hedgers, investors are ready at any moment to overreact, sometimes too quickly, to economic reports as they are released. For those who want to really understand this, you have to take into account that with these dramatic moves, more than likely a massive drop down means there's going to be a massive rebound, and vice versa. Any kind of movement in one direction or another brings us to having to interpret these things as being only temporary moves for such quick movement. So it was a good buying opportunity, as I mentioned, when the prices were down. But the lesson here also to be learned is if the prices spike up dramatically in one day, hey, that may not be a good time to buy, because more than likely prices will probably snap back down or drop back down again just as quickly. And we've seen that happen before too. So that is something that we have to take into account. And what is that? The lesson that we can learn from this is to take a step back and breathe a little bit whenever the markets react in that way. And I know it's exciting to talk about. It sure is. And it's exciting to discuss. It's exciting to see the precious metals make such dramatic movements in such a quick amount of time. But in the long run, the fundamentals remain strong with gold and silver. They do preserve our wealth. And the best thing we can do is to hold on to what we've got and be appreciative of what we may have gotten when the prices were lower. Or if you're just starting out and you're feeling the need to accumulate precious metals to preserve your wealth, just understand that there are going to be times of volatility like this for one reason or another. And we have to see that really it's good to wait until the official numbers come out. But then again, a lot of people don't even believe the official numbers for the Bureau of Labor Statistics and unemployment and the like. But nonetheless, more people are going back to work. I think that's a good thing, regardless of your political viewpoint. I think we need to get more people back to work and stop all of this, these checks, these stimulus checks going out to people now. People just need to get back to work. And then I think things will be a lot better and we get back to normal a lot quicker. So there you have it. That is how gold and silver's wild ride got taken for, sparked by this misinformation that we talked about from the ADP. So there you have it. Let me know your thoughts in the comment section below. What is your next target? Are you buying at these prices? And they're pretty high all around, especially for gold these days. Let me know. I'd like to extend a multitude of gratitude to you all for taking the time to watch. And encourage you to please rate, share, comment, and subscribe.